Hey Pippa! Mike Martin's here with the Mike Martin's channel. Thanks for liking, joining, and subscribing and being part of the channel. Okay guys, thanks for joining us last night on Trends in the Housing Market. We came back on. We're going to try to do a 1-hour show every Wednesday and have one caller in. Go over some of the headlines on what's going on and then have a caller. So if you guys want to join us on Trends in the Housing Market on Wednesdays, here's a link to the last Wednesday video. Hope you guys enjoyed. We got a great caller in and look forward to reading your comments on the video. Okay, so what's going on? Oh, also, I got the finger today. I got the finger 2 times in 2 days. So don't forget to check out the Merit Harassment Series. Link up top, Merit Harassment Series. If you haven't seen it yet, check it out. It's pretty cool. Anyways, okay, so what's going on? Well, I've been getting quite a few emails from all over the Commonwealth. I'm not joking. And they're very specific. These ones that I've been receiving lately is that people are having a tough time renewing their mortgage or coming up for renewal. Their total debt service ratio does not fit. So what is the total debt service ratio? This is something that we talked about on the channel 5 years ago. TDS, what's your total debt service ratio? So we made this video on the channel years ago. Basically, what is your cash flow? So your total debt service ratio, basically, you could find one online for free. It's free. You could find one, fill in your car insurance, your car payments, average gasoline per month, food, whatever you spend, and it tells you how much you could afford towards a mortgage or how much, if you want to get a mortgage and you put the mortgage payment in, it tells you how much you could afford to eat. You could do it reverse. You could do it to see how much money you have left over after you buy all your necessities. What do you have left for a mortgage? Or you could put the mortgage price in instead to see how much money you have left over for food. And that's what most people did. Most people did that because they kept thinking that housing was going to keep going up. And that's not going to work. Even with all the laundered money that we got in, all the dirty cash, the shadow banking, and all the gangs bringing in money from China, it still didn't. It brought up the housing price substantially, and then you have Canadian government, Australian government, New Zealand government, UK government, and the blue states of America competing for money placement from China. Bring your money over here! Don't worry about our middle class that built the infrastructure. Okay, so that's what's going down. So now, what's happening is people are going to their banks and saying, I'm up for renewal in X amount of months. I'm looking to lock into a fixed rate or whatnot. Okay, no problem. They look at that because, you know, the banks is a win-win for the banks because they have to pay $800 or $1,200 for the documents. They have to pay, they might have to get the home reappraised. I don't know. There's a lot of money involved to be made for the banks when you renew your mortgage, especially when interest rates are going up, so they can collect more at the window. So what's happening is people's total debt service ratios with interest hikes deem them as unaffordable. Their payments will become unaffordable. They can't. So I've heard so basically they go in with their pay stubs, they go with everything. If they had any raises, they update all the application. They see what they're at, see what their housing value has gone to, if it's gone up, if it's gone down. Then if interest rates go up, that's the key point here. Now, you're going to start to see a lot of people underwater where the homes are worth less than what they bought them for as housing starts to drop, as interest rates go up. Now, when interest rates go up, you're obviously going to pay a higher carrying cost. But for whatever, okay. So you're paying more to carry that money. Unfortunately, this is not Alabama here, or Florida, or Texas, where you could still get into a house at $165,000, a 3-bedroom. You could still get in many places. In rural areas, you could get into places under $90,000. Okay, your interest rate goes up. It goes up $100 a year. Here, interest rates go up. It's going up from $1,500 a year carrying costs, $1,500 a year, to $10,000 to $12,000 in some cases, depending on how many interest points that they raise the interest to. So your carrying costs become more expensive. You plug it into the system. Your total debt service ratio obviously shows that, oh, this guy can't afford this. This guy can't afford this payment. How is he eating? That's what you start asking. What is he eating? Because he already has the house. So if he was eating and didn't have the house and wanted to buy the house, the bank teller will ask him, how are you going to eat? But this way, it's vice versa because he's eating off the house. So that's what's happening right now. So people can't or having a tough time renewing their mortgage because they're just out. They can't, the bank won't approve them because they're too high risk. Underwriters might have to bend rules or basically ask if they have a cash job on the side or something, or somebody else that you could put on the title that have the income to show, or something to raise the total debt, the TDS, to a nominal level that you shows that you could afford to make the payments. And that's the problem that's happening here. So now, I've heard through the grapevine, let me know in the comments below if you've heard, that they're pushing people towards variable rate mortgages, where obviously as the rates go up or down, your rate basically sticks to whatever the lending rate is. So basically, keep this in mind. Keep this in mind, folks. This is very dangerous. And I told people years ago, get off the variable rate mortgages because rates are going to go up. I've had a lot of people tell me, what are you talking about? Rates are just going down. They have to keep going down to keep this going. They're not going to raise rates on us. So there it is right there. They're going to have to keep raising rates, and they don't have a choice. And they're going to have to keep moving forward. So you're probably asking, why do they lower rates so dangerously? Why did they create this Frankenstein monster? So there it is. I actually compared it to Frankenstein banking monster, a video we made almost 2 years ago. And there it is. Oh, I'm getting sued for being harassed. Guys, don't forget to check out the Merit Harassment series, please. So there it is right there. Now, it's kind of important. They've created this zombification monster that's going around constantly lowering rates, devaluing the currency, hollowing out the currency, basically. And the average Joe Donuts has no idea, thinking that the banks and the governments are there to protect them. Well, I'm sorry, they're not, and they never were. They've always been against you, especially when banks have been constantly deregulated, taking out regulations to allow, I guess, government criminals to participate and do harmful things to us. And lowering rates, constantly lowering rates, was to get the middle class into the housing market, because the middle class was completely bought out of the housing market back in 2016. They couldn't even find first-time home buyers back then, unless, again, you're moving to rural areas. I'm talking about the bigger cities in Canada. Now, forget about it. They can't. They're trying first-time home buyer loans. They're trying this. They're trying that. It's not going to work. So people are going to, don't be shocked if you go to the bank to renew your mortgage because of your interest rate hike and the higher costs that you're going to be occurring with the rate hike. It's not going to be easy. And that goes back to the video I made yesterday, where they're going to start federalizing your private debt. It's going to seem good at first. It's going to be a consolidation. It's going to be good on paper, but it's going to haunt you for the rest of your life. Let me know what you guys think. What's going on the ground in your area? Are you having people having a tough time renewing their mortgages because the new acquired costs of interest rate hikes is putting them outside of the affordability level? I mean, what if they take a fourth or fifth mortgage to pay off the hike difference? I'm being sarcastic here. Anyways, guys, let me know in the comments. See you guys on the flip side. Mike Martins here. I have spoken.